Welcome to Trading Lounge and the SP 500 for the 17th of June, and starting with the daily chart for the S&P here. As you may know, we've been looking for an ABC correction across the 3000, which is a major trading level 3, and we're looking for, well, in a nutshell, on a bigger picture, we're looking for the arrival, the reaction, the first high above the level, then the ABC pattern, which in essence is this pattern here that we're looking for. So we've had the arrival, the reaction, the first high above the level. So we're looking for the A wave, we've got the B wave in now, and we're looking for the C wave here. We can look to buy down here. We'll just look at the speed of which this comes down. We don't want it coming down any faster than the angle of the A wave here. So we can pick up a few contracts in here and through here, but essentially the safe trade is back on the level over this side over here. That will confirm that we're on the right track. In fact, you know, when we've got a move like this here, it's only confirmed as an ABC once we take out this top here. Then it becomes the ABC. Otherwise we don't know, because it could be down for one, back for two, down for one, back for two, and fail here, and then move down lower from that point. So this is all like higher risk area through this space here. Right, so the arrival, the reaction, the first high above the level, the A wave, the B wave, and the C wave here. Now the B wave here looks rather bullish, and it looks rather impulsive, and so on and so on. So, you know, we need to just give it a little bit of time here, but we also don't want to miss out on anything. So we're traders. We don't want to, we just want to take money from the markets. Being right or wrong in the analysis is well, it's nice to be right, of course, but it's not the end of the world for us. What's more important is taking money from the market. So we need to be on the market. We need to be on the right side at the right time. So for that, we could say, well, if this top is taken out, we need to be long. Yeah, that's fine. But we should also be able to go long sooner than that too on the current high here as well. And we could also use the Nasdaq as well, because the Nasdaq is buzzing around the 10,000, a major trading level 1, and we'll have a look at that as well. So yeah, look, what we're looking for here is a move down for wave C here, and then up for 1 and back for 2, and so on, and moving up over here. So we don't particularly want to, I mean, because it looks rather bullish here, we don't have a very clear ABC pattern. So the markets come, I mean, one of the things we have on side here is the move down through here, well, on the S&P anyway, looks very impulsive in terms of 5 waves down here. The Nasdaq, we could probably get 3 waves out of that. But for the S&P, we've got a nice 5 waves down. So the B wave, when that pulls up, normally we're looking for a nice A, B, and C wave for the B wave, but we haven't got that. What we've got at the moment is pretty much a sharp move straight up here, and then we're expecting it to go down. So we are scratching our heads a little bit and thinking, well, this really sharp rally here, hasn't really conformed to this particular pattern here. So it does raise a flag. But at the same time, we just need to give it a little bit of time at these current tops here, because the little spike above here is above the 61.8% as well. So we shouldn't see it going any further. And if it is going to go any further, well, then we need to be on it, because it will be bullish at that point. Okay, so even the short side as well, we need to take caution there as well. But look, let's just slowly move in and have a look at the pattern. So as you know, we'd been looking in a nutshell as 5 waves down. So it's quite a nice 5 waves down. I mean, this little section in here is a little bit dodgy, and there's different ways to count that. But apart from that, we've got a really nice third wave here, nice powerful third wave in this instance here. The market has moved up to our target area here. Yes, it did spike higher. That's okay. But it is consolidating in this area now. So this is where the battle is. This is the front line. In fact, the 3,100 is the front line here as well. So on the short side, if the 3,100 became the resistance, then we know that we're on the right track coming further down at that point. This is a major trading level here, and then we've got group 1 above that, which would be 100, 200 and 300. When a market is normally making the first high above the level, it normally fails to find support on the 3,300. If it finds support on the 3,300, well, then the market's going to go higher from that point, and would also look for a classic trading levels pattern across this level here as well, the arrival, the reaction, the first high above the level, and ABC, and then we can go long again. But getting support here severs the market, or the market pulling us back to this large number here. But group one here, when the market's coming up, is they are the resistance levels here, that because normally the fifth wave is on lower volume and it runs out of energy, so these levels tend to, these price points tend to slow it down and bring it back here for the accumulation process, correctional process to play out. So yes, as I mentioned, this move up through here, it's not really looking that it's not looking like an ABC, like a very clear structure here. It's very much like an impulse wave here for this. So this is why we need to be a little bit mindful of what's occurred here, even though it's reached the level. But let's go in a little bit further here to the hourly chart here. So it's a little bit tricky to count to the upside here. First of all, this little move down through here as 1 and 2 and 3 and 4 here. Wave 4 here can also sit in here as well. I'm a bit more comfortable with that. But just for the sake of it, we'll just put it there for the time being. But on other charts, we may see it be sitting here as well. Not that it matters at the end of the day, because we still end up with this low in place here. So our concern really is this structure to the upside here. I mean, it counts, visually it looks like 1 and 2 here and 3 and 4 and 5 here for an impulse wave. And that's how we've got it counted on the Nasdaq. We've got a slightly different count on the Nasdaq, as you may know. The other thing we've got to be mindful of here as well is that from this low here to this high here, say, well, then we also need to look at the 50-60% retracement level here as well, because if this somehow isn't, if this is somehow here an A wave to here and a B wave to here and a C wave to here, which I can't see it at this stage, but anything is possible in the markets, and we need to be absolutely flexible. And all we're looking for really is trade setups. We're just really looking to, how we make money out of this. So if this is an impulse wave up here, then we could even have an A wave here, B wave here, and a C wave here, and then move up from there. So the 30-50 would expect, between 3,000 and 100, we have the Fibonacci numbers of 1, 2, 3, 5, and 8 through there, and 5 is the second strongest number. So this is going to show up here as support here and play out in that space there as well. So just be mindful that even if we are coming down here further. So yeah, let's go in and have a closer look still. So in this case here, this is how I've counted it to the upside in terms of 1 and 2 here, and little 5 waves up to 3, 4, and 1, 2, 3, 4, 5 for A, and then a B and a C wave here. And I'm not that happy with this particular count, but I'm sort of forcing it to fit in a way, so I'm sort of struggling with that. So we just need to be a little bit mindful of that. Even this little move down through here, as I've got as wave 1 here, can also count as an A and a B and a C down here. I pulled it apart on a 20 tick chart, and I still really can't come up with an answer for it, because it still can be an ABC pattern in that space there as well. This little move up here, it counts okay as a corrective wave. So I'm okay with that here, but also this little move down here also counts as a corrective wave, bullish corrective wave coming down here. So this is a real mess here. I can see what's occurring here. There's a real battle between, the bulls and the bears in all of this here, of, who's going to take control of the market here. It's really not a very clear wave structure, and you'll see that when we get into the tick chart. But just in a nutshell here, we talked about, going long above this high here. And remember that the 61.8% mark here, if we can just bring that back in for a moment here somewhere, just roughly. here and here, and we open this back up here. 61.8% is here, so it's really quite central to what's going on in this little space here. So it's really the balance point in all of this here. And as I mentioned, this down here, it can count as 5 waves down, but it also can count as an ABC down here as well. It's a little bit tricky to count in this later leg here on the tick chart here. This little move up through here, I mean, you could count it as 5 waves, as 1 and 2 and 3 and 4 and 5 in here. And that's all sort of fitting, except for wave 4 overlaps wave 1 here quite a lot. So because of that overlapping wave structure, it's better to be counted as a corrective wave. But we still need to be mindful of it. This gets really messy. But what I was thinking is that taking the top out here is cool. Let's just put a line through here for the time being, so I can just come back to that later and know where that is exactly. It's really nice balance point for all of this. So once the market drops below that or finds that as resistance, then that would give us the inkling that the market would move down further. Obviously the market is supported on this level here, on the 3,100 here. And to short this market, we'd really want that as the resistance. So on the short side here, we'd want to see this move down here, move back up, bounce off that rather, come back down, move through here, and then we can put our short trade under here for this. And that needs to be breached, you know, I mean, we need to see that come down from that point for that to occur. We'd never chase the first move down here. We just wait for the low to come in, and then that becomes the reference point for the short trade, because that moving back up there could just, like here, could just simply move back up here and continue, you know, further up from that point. So this little trick here is good to work on the short side and the long side as well. You know, these are all long trades through these highs here as well. Anyway, we can go long here. We can go long above this high here as well, because this appears to be corrective here for this. And this little low, this is something else that we just need to, you know, understand here as well, is that this little move coming up to here, coming back here, finds a nice support in its 50-60% retracement level here. That's the 61.8% here for that. So yeah, and we can go the other way as well. We can just, it's almost like a bit of a triangle pattern working out what's what here. That's the 61.8% here. So that level there is really important as well for all of this here coming to the upside. So that level there, as it's not right on the money there, but we know that you know, that's the resistance here. So getting support on that, or that would be the 61.8%. So going long above that would be the right thing to do. Okay. Yeah. And then you can also look to the levels, because we'd be looking at 50 at that point, 150. So if that became the support with the classic trading levels pattern, you can also go long on that as well and build on that there. So just clean a little bit of this up. So we'll have a look at the tick chart, and I'll just show you what we're up against here. It's really quite messy in here. So let's just bring it all into picture here, and we'll just talk about it for a little moment. So first of all, the move down through here, that's just if we got that B wave top here, you know, looking at this could be counted as an A and a B wave here, then 1 and 2 and 3 and 4 and 5 here for a C wave here. So an A and a B and a C wave here. So this could certainly be, if I just copy this here, that could certainly be an ABC for this pattern here. But, you know, this one here counts quite nicely as 1 and 2 and 3 and 4 and 5 here. So that's okay. That's an impulse wave. So we could look at that, whatever, and pulling back here, then another impulse wave up here. That might need to go on the next high here, but it doesn't matter. And then this back here, and then this up here. So 1 and 2 and 3 and 4 and 5. It doesn't count very well. I mean, it counts in a way that this is the longer leg here. This is shorter than the first leg, but this one's shorter than the last leg. So in terms of Elliott, that's okay. The only problem here is this overlapping this over here, which makes that corrective. So the only way I can count this correctly would be an A and a B and a C here for the A wave, and then a B wave here and a C wave here for wave 2 for that. But you know, it's not that flash. So this is not giving this, and I have pulled it apart. I've got a problem in here trying to sort this out here a little bit. So I'm not happy with this. Well, let's just say I don't understand this. This is probably the best fit for this here as a corrective wave up here, because it's got overlapping wave structures. And then I get into this space here where this leg coming down through here, I can count it as 1 and 2 and 3 and 4 and 5. So we can get an impulse wave here. This is also an impulse wave here as well. So I could count this down for 1 here, back for 2 here, then down for 1 here, back for 2 over here. So if I just borrowed this here for a moment, so have this down here as 1 and this one over here is 2. That looks about finished there. That could be done. So we could count this down for 1, back for 2, down for 1, back for 2, and then continue to move down here further. If the 3120 here became the retested resistance this time around, then it's highly likely the market will be pulled down to this level here at this stage. But on the other side here too, I've got wave C here. So this here can be counted as an A wave, a B wave, and a C wave here. This little move up here counts as corrective up here, because I've pulled that apart already. Obviously, this little part, this can be counted because of the spike here. We can count 1, 2, 3, 4, 5 here for this, an A and a B and a C back into here perhaps, or this is actually up for 1 and back for 2 part of this one here. So there's a few things here that I can just see that these can be counted differently. So there's nothing clear here for us at all. This is the 61.8% here, so it's getting support on that at the moment. The other point here too is that just using the levels here, getting support on this number here, a nice tested support this time around, would also see the market to the upside, but we would need to see the arrival, the reaction, which we've got here. We'd need to see the first high above the level, then an A and a B and a C wave here, and then we can also go long from this point here as well. This trend line coming through here is pinning this down through here as well on this particular high here for that. So look, as I mentioned, I'm finding it very difficult to give us a clear pathway on all of this. To me, it just can be bullish. It wouldn't be bearish unless unless we were under the 61.8% here, which is the 3,100 area through here. So just to recap this a little bit in this space, support on top of 3130 as a classic trading levels pattern sitting on here. You could probably get a very small position and then look to add to that position on the 40 as a classic trading levels pattern, which would be taking this high out here. You can also add over on top of this one here to the upside here as well. So I'm just going to have a look at the Nasdaq. Now, this is just the hourly chart. Now, it's got pretty much the same pattern down through here as the S&P. It can also be counted in different ways as well. I'm not interested how it can be counted. The move up here certainly looks impulsive, and we had a situation where we had looking for a C wave up here. Oh, sorry, not quite like that. We need to have a look at this. Well, let's just go to the tick chart. I think I had it on the tick chart, didn't I? Yeah, so I know it's a bit messy, but stay with me. The A wave down to here we had, and then the corrective wave A here, and then the B wave here, and a C wave up here for this. So, and it does appear that we've got 5 waves up here, but once again, I've got this situation here, And I'm just going to go back to the 1 hour chart because the count is not really what I wanted to talk about. What I want to talk about is the setup for going long, because then if the market's going to push higher, it's likely that the Nasdaq is going to push us higher. So once again, we are looking for this pattern here across the 10,000. Okay, we'll come back to that. So we're looking at this here in terms of the arrival, the reaction here. And then if we're going to be something moving up, we're going to see the first high above the level that will probably come into this space over here somewhere. And then we'll probably see it come back into checking that again and then moving up from that point. So we can only really go long over here and in this space over here, and we can do different tricks through here, and we could probably buy down here and all the rest of it. But in a nutshell, this is what we're looking for. It's a bit like over here in a way. So we treat this the first high above the level. So yes, we can go long above there. We look for the second high down here, which is this one for the sake of it. And if the market came down and went back up, well, then we'd be long from that point. And it didn't happen, but on the flip side, it kept us safe, didn't it? We didn't like chase the market to the upside. It's just a little important point that I just got to kind of continue to hammer home to folks, and there's always new folks coming on as well. So I like to really, if you don't understand Elliott, the trading levels can really be a nice sort of backdrop thing to work with. As you can see, they really play out. The more that you understand them, the more valuable they are. And really, it's just a game of support and resistance and getting from one number of the same degree to the next number of the same degree. And yeah, so that's it. So we just really need to see how this plays out in the next session or two. But on the long side, it's likely the Nasdaq will lead to the upside, if that's going to be the case indeed. And if it does, then we still need to wait for the first high to come into play here. Okay, and yeah, we need a setup. We pointless going long here and pointless going short here. We need a setup for both of them, and they're just not there just yet. So we'll see how this plays out here. So just to recap on the downside here, we talked about the long side. This number here, when we're talking about group 1 here, 10, 20, and 30, this is minor group 1 here at 100, and these are sub levels here. You can also go down to micro levels as well. But what I want to point out here, if this moves back down through here, the number 20 here becomes the retested resistance. You can look to get your first short trade. I can't get that in there, it won't go across, but short trade in here. And then you can also look to lock in under the 10 once that becomes there, and then also under here and lock in on that side there as well. So really all we're doing as traders is we're looking at the closest largest number, which is this one here. And really on the short side, we need the closest largest number as the resistance here to go short. Now we can get cheeky and get in a bit earlier with the 20 becoming the retested resistance and this one here, and then adding to this one here and so on. And group 2 down here will give you support. So 65, 72 and 80 are the other levels down here. That will coincide with this low over here, but we should move through that in due course if that's going to be the case, if we lock under here. And on the upside here, in terms of taking the new high here, we can drop down to this high here, and then we can use the levels here, because if we get a tested support on this one here now, then we'll be going up to the 50 at that point. And then the 50, you'll see a classic trading levels pattern there as well, and you'll need to do the same thing here as well, or just take profit here, get out, and then wait to get back in, or take part profit. All these sorts of things you need to decide for yourself at this stage. That's all I've got at this stage, and I know that I don't have any clarity about this, and when I don't have clarity about the wave count, I always come back to support and resistance and look for trades in that way, and that's what we'll do here at the moment. Now I know it's a little bit, you'd probably be a bit frazzled at the moment, because many of you would have tried to trade through all of this here, but out of this will come a trend. So don't fall asleep at the wheel on this one here. Stay strong. Cheers.